Investors may have certain associations with various brands and investment firms. What should investors look for in an asset manager, and how important is it in terms of their investment decision? Gregg Warren is here to share his view. He's a senior equity analyst at Morningstar.
You know, I think sometimes it's easy for investors to fall in love with a particular brand or a particular company. The asset manager's best friend has always been inertia. Investors don't necessarily move out of funds when they probably should. It's something that we at Morningstar, have highlighted over the years. But, when we look forward, sort of the best business partners we see for investors, for advisors that serve investors, are ones that are, first and foremost differentiated. You're going to have a decent amount of scale. You're going to have a good broad product set. Having passive product offerings is going to help. But that brings us to point two. You really sort of have to have low cost offerings. We think, from a product perspective, though, your funds have to be competitive with your peers in their categories. And so we're expecting to see some fee cuts over the next several years as firms continue to right-size their business. A third consideration to think about is, whether or not the investment process that they have in place, is it sustainable? Is it generating good, solid, long-term results? And that's just as true for a passive manager as it is for an active manager. So those are important things to sort of, keep an eye on. And then the fourth thing is this manager, is this fund family that you're investing with, are they adaptable? Are they capable of shifting gears and adapting their business model to adjust to the realities of the market? I think that, as long as you have those four things, you're likely to do well by yourself longer term.